So good afternoon to all our mentorship traders. I'm sorry for not being able to conduct our weekly session on Friday evening like we do all the time. Today, we're doing it the next day, which is a Saturday afternoon, 1 o'clock, the 4th of July, the American Independence Day. Nevertheless, I appreciate your support that you've joined in on a weekend afternoon. And I welcome our new community members also. We talk about the index and sectors at the first few minutes, and then we take up your doubts and queries. So I have here the Nifty monthly chart. We had an impressive month of June and an impressive quarter also. If you look at the quarterly chart, one of the biggest quarterly gains that you have seen ever for the index. Very healthy bounce back, considering the way it sold off from the highs of close to 12,500. Now, we're in the month of July, and we are coming in close to the lows of August and September, which is 10,600 and a little above that. 10,630 is the high that we saw in yesterday's session. Now, this is the weekly chart. I still have the level of 10K drawn here. That's where we found last time we found some amount of volatility, but now the index is extending pretty nicely on the upside. This is the August September lows that we saw in the monthly chart, and this is where we have close to the 10,730, 750. We have a gap also. So if this kind of move continues further up, we can expect the index to come and test this gap. Now, last week I was being very careful and cautious because if you remember, we had a weekly hook setup on the Nifty future, this one. And I was being careful and cautious because of a couple of reasons. One, the index had slipped significantly from the weekly high. Second, we had a hook setup which suggests that the index can cool off or at least consolidate. I also did take a look at the VIX, which was at a very relatively lower level, should have bounced back, but nothing like that actually happened. A little bit happened on Monday. Tuesday, it sold off from the day's high, but then after that, Wednesday, Thursday, and mainly Wednesday and Thursday was one-way move for the index. It shows very clearly, especially when it negates a possibility of a fall, it clearly shows that there's something else in mind. Two things I have noticed in my experience happens when an expected or anticipated setup goes wrong. Either it will go the other way around one way, or it will create another setup just to stop you out on this one and then move in the direction of your earlier anticipation. As of now, the index is dealing with the 233 exponential moving average, which is just kissing it right here at 10,600. On the daily chart, if we bring back our indicators, then we have a situation where there's early signs of an intermediate divergence. We cannot confirm it yet, but I feel that the index will maybe extend a little further ahead and then create some kind of a setup if it wants to consolidate. The levels that one should look into, if you look into the 75-minute time frame, then 10,450, 10,500 from a short-term perspective. In fact, if you zoom in close to the 75-minute time frame, we have a hook setup here at this bar, which can lead to a little bit of correction, if at all, close to 10,500 or this rising gap, as you can see here. On the upside, it might drag itself further up. It's got resistances at these gaps, which is 10,650, 670. These are the levels that the index will work on. This is the Nifty daily cash market, where I have the Fibonacci levels drawn. And we can see that the index has taken out the 10,400 cluster very well. And the next level on the Fibonacci cluster is way ahead, up. It's around 11,000. But one thing I'm going to keep a close watch on is this. The index is creating a rising wedge. I could have drawn it a little better. Let me try. Erase all drawings. Okay. And yeah, so I was showing you the structure of a rising wedge right on top of this rising uptrend. Now, generally, they act as vicious reversals. On the other hand, I've noticed when they fail, it's equally vicious on the failure side. So I'll be keeping a close watch on this if the markets go crazy on the upside. And if it comes down, then definitely the fall will be vicious. It will be sharp. And in that case, a 10K would definitely something that one should keep in mind. So I'm at a best case scenario or wild case scenario on the upside is 11K and wild case scenario on the downside is 10K. I would say that a move or a sustain above 10,650, 700 would increase the higher possibility of this one, where the divergences will get negated, and a break below this bar's low, which is close to 10,450, 10,425. This can lead to possibility of a correction. Too early to comment, too early to go really bearish. So I will stay cautious. I will stay a little careful, though the markets have completely shrugged off and proven my cautiousness wrong. But nevertheless, looking at the indices, the sectoral indices, that is, let us quickly take a look at Bank Nifty. Now, if you look at the weekly chart of Bank Nifty, we have an inside bar. Nifty has taken out the weekly highs on a week-on-week basis, but Bank Nifty has not managed to do that. It's been range bound, and it's still not managed to take out the 38.2 Fibonacci retracement. It's still there. It's 22,500, 420 levels. So Bank Nifty is one that one should look at. If the index fails to hold on, can lead to some weakness. We saw that PSU banks being the second biggest loser in last week's trade. Small and mid caps kind of underperformed, and it was mainly Nifty. Look at the outperformance from Nifty, 2% on a week-on-week basis compared to a flat on the mid and small caps. Auto, I was expecting, in fact, that was my expectation that autos will ease off. It did not. On the contrary, it moved up further. If I run this same report designer on the auto index, on the auto group, there you go. We can see that it's Hero Motoko that took it away, 7%, followed by, I would say, Mahindra and Mahindra. Now, this stock has shown exceptional strength for sure. I was expecting that the lows of August, December 2019, the psychological level above 500, 510 would lead to some amount of ease off. I won't call this ease off, but then it just took off from the lows of 490 and little above that. Primarily, it's M&M and Hero Motoko that led the move. Yes, of course, we cannot leave behind the best stock in terms of the weight, which is Maruti. The Maruti also is creating this rising wedge after a rising market. It's dealing with a falling gap. It's definitely respecting the resistance which is coming in from this zone. So let's keep a close watch, but auto definitely went exceptionally well last week on the upside. I'll bring it back to the sectoral gainers and losers. Real estate was the biggest loser, followed by PSU banks and media. They don't matter too much. Pharmaceutical. Now, pharmaceutical, we all know that it's been a great run for pharma, and it is on the verge of creating what we infamously know as the head and shoulder pattern. Now, I'm not creating castles on the clouds, and I don't know whether it will shape up or not, but the behavior till now is similar to that. The weeklies are definitely stretched. There's no doubt about it. Stocks like Aurobindo Pharma, if you look at, has had exceptional run. But I don't think it's going to give away that easy the entire pharma sector or pharmaceutical stocks. DV's lab sold off quite sharp last week. Dr. Reddy is also close to support. So we can expect some amount of movement from that space. Lupin also is one candidate. Metals can weaken if the index weakens, because we can see on a week-on-week basis, the index have broken below the weekly lows. It has created a lower weekly low and a lower weekly high also. Be careful. On the contrary, if it breaks above the high, then we can find some fresh buying impetus coming in. In fact, when I look at the sectors, it seems fairly poised, nothing much to take away apart from the strength that we saw in auto and IT. Now, remember that whenever we do this weekly sessions, I've been repetitive enough to say that the sectoral relay is happening in a manner where in one group we have IT, we have FMCG, and we have pharma. And when these guys slow down, then it is taken care by the banking and financials, and of course, our blue-eyed boy, Reliance Industries. Now, IT and FMCG, especially FMCG, we were talking about 30K, how important it is. It has taken it out pretty well. So I think the strength of the momentum in FMCG will stay. IT has also taken out what I was expecting as possible resistance here, and it has taken it out, and I feel that IT may also continue to do good. We had exceptional moves. I will run this report designer on the IT stocks just to take a look at them, and just to understand that this trend that we saw last week, TCS, HCL Tech, Infosys. So there you go, the first top three stocks that matters to the market and matters to the sector also has given the best of the moves. We have close to 4 days consecutive move on Infosys, 2 days consecutive moves on HCL, and 3 days consecutive move on TCS. Of course, they will slow down a little bit, no doubt, because TCS especially is going to deal with some serious amount of supply, some serious levels. This is a very, very important serious level for the stock. So it's not going to be as easy as it seems it was so far so good. But I'll tell you one thing that I take away from all this. That is the fact that if I open the chart of Nifty, we've more or less covered the 50% mark of the fall. And this is the fall. And you can see where we are right now and where we were up there. So it's got some distance, but it's covered also quite a bit of distance. So this is where we are, all right? Visually, pure visual analysis. And then if you look at stocks like TCS, it's almost there. If you look at HCL, it almost was there. If you look at Infosys, not bad. So these three stocks have outperformed. Tech Mahindra, I keep on saying, has underperformed big time, so stay away from that. Wipro, look at where it is right now, it's underperforming. Mindtree, not a trading stock, primarily an investment counter, looks good. Every time it has given us a breakout, has failed over the last, I think, a month or two. Let's see what it does this time. NIT Tech, it's taking its time. It's a little volatile on both the sides. I would say TCS, Infosys takes it away, and also HCL Tech. Buy on a dip on IT, buy on a dip on FMCG, definitely. Pharma can give a slightly deeper dip, so we should be a little careful, but the pharmaceuticals can also be a good swing long candidate. I'll be looking closely at the financials, the banking, because Bank Nifty has an inside bar on the weekly chart. Let's see how it plays out. Keeping the bullish stance and also maintaining the element of being cautious as well as careful. Let's see what's in store for us next week. Now, as always, we can start discussing our doubts and questions on the trades that you did over the period of last week. Please ask your questions.